Hello everyone, welcome to Algo Expert. Today we are going to explain you everything you are going to need in trading. So after this bootcamp here, you will understand how trading is working and you will no need to sign up for anything. You will trade for yourself and understand how trading is actually working. I'm not a financial advisor. Trading involves risk, and also I'm not selling you any courses, any mentorships or any signals. The only thing which we are doing at Algo Expert, we are teaching everything for free. And if you can apply these concepts for yourself, but we're having here, like for example here, some tools, and also here we have many other tools which you can use to understand these concepts much easier, or the tool is doing the work for you, that it's showing you what is actually, where the liquidity is, how the market structure is, how price action is, or the order flow, and so on and so forth. If you want to try this tool out, we have a free Telegram channel, which is the link in the description, and you can then, after go to our Telegram channel, there is a trial for the checkout link where you can test for free 40 days all the tools which we have here for free, that you can see whether you like it or not. And after the tests phase, that you can just decide whether you want to use it further or not. So let us start and go in depth about trading. What are the most important thing in trading? The most important thing is just liquidity, to understand whether we are going to buy or sell, nothing more. So trading is really easy if you understand the concept. Don't overcomplicate it, because you can do just two things. You can buy or you can sell. It's nothing else to do. If you're buying at the right moment, you are doing money. If you are selling at the right moment, you are doing money. So there's nothing more. And how this is just liquidity, to read and price whether we are getting stronger, or reading price whether we are getting weakness in price. That means to understand when price is getting weaker or when price is getting stronger. This is the only thing you need to know to understand trading, because this is the liquidity. Whether we have a lot of liquidity where price is getting stronger, or we have the liquidity that price is getting weaker and is seeking for liquidity to grab more money, and then we are going to sell. And how are we going to understand this? And there are only three ways how you can understand how to read strength or weakness in price. And these are market structure, price action, and order flow. Nothing else. But the key thing is about that, for example, the market structure thing, you have to understand how the real mechanical market structure is working. Because a lot of people are teaching you how market structure is working, but if your market structure understanding is not right, you are thinking, like for example, the H4 is bullish, but is actually bearish. And at the end of the day, you are buying and you are losing because the understanding is not right. Or like for example, price action. Just apply on YouTube, just write price action and see, for example, how many people are teaching price action. And you are asking 10 gurus or 10 YouTubers or whatever about price action. Everyone has a different understanding and everyone is teaching it differently. But in real, it is just one concept. There is nothing subjective to ask someone whether is it like this or like this. And this is also the second mistake about price action. And then we are going about order flow. So this is a bootcamp. Today we are going to speak in general about many topics. That means about these three and also the liquidity. And by time we also, like on day 2, day 3 of the bootcamp, we are going more in depth about market structure, price action, and so on and so far. And let us start, like for example, with market structure. A lot of people, they have a misunderstanding of market structure, how market structure is really working. That means you have two different scenarios. You have a bullish scenario where we have forming something like this, higher highs and higher lows. And we have a bearish scenario where we have lower highs and lower lows, nothing else. But inside here, inside this kind of things, we have many structures. But how to read what is a swing high and swing low? This is just an example which you can see, like when someone is teaching you this, or someone is teaching you this. It sounds easy, but now you are looking at the charts. What is now actually the swing high? What is actually the swing low? Like for example, here we have many wicks here. Which is the swing low? Which is the swing high? First concept is how to understand what is swing high and what is swing low. A swing high or a swing low is always something like this. Let me just grab here this one. A swing high, if like for example we have here, this is the candle. This is the one candle here, which you see, which we can say as a swing low. This is like a swing low here, if you can see. The swing low is only valid if we have two candles before that which are higher and two candles after that which are also higher than this candle. And there is also some scenarios where this candle or this candle is lower also than this candle, then this candle is still a swing low. The most important thing is that this wick here is lower than these two wicks or these two wicks after. Or the body also, because sometimes there's a candle without a wick. But it doesn't matter whether this is lower than this or this is lower than this, and vice versa for the candles after the swing low. And the same thing goes with the swing high. That means if we having, like for example here, this is the swing high. Let me just write down swing high. Let me make it a little bit here, going a little bit up for that. Just one moment. And now the same thing. This candle here has to be also lower than this swing high. That means if I take the brush again, here is the candle and here is another candle which has to be lower than this candle here. And the same thing here again. That means these are the only valid swing highs and swing lows. If this here, this wick is above this one, then this wouldn't be a valid swing high, and you cannot take this as a valid swing high. That means if we are going at the charts, let me just, for example, here, go here back to the charts. You see here, this is a valid swing low. Why? This candle, this wick is lower than this wick and this wick. Also lower than this wick and this wick, or this candle and this candle. So this becomes a valid swing low. A swing high. This candle here, if you can see this one here, this on the right one, is the valid swing high. Why? Because we have here a lower than this one and also lower than this one, and this candle has also, these two candles are lower than this one. But if you look, like for example, for this candle, this is not a valid swing high. Let me see, like for example, this candle. If you want to look whether this is a valid swing high, not this one, this one, sorry, this one. This is also not a valid swing high because this is higher than this one, and this one is also higher than this one. And this is the way how you are reading what is our valid swing highs and swing lows. And after deciding whether we have valid swing highs and swing lows, you have to now read whether we are bullish or bearish. That means how to do that. if this is a valid, let me say, like for example, I'm now only doing the valid swing highs and swing lows. If we're having valid swing highs and swing lows inside here, we are not counting them because we are looking at the range. That means if this is now the range, you see that here, if this is now the range, no matter what, if like for example, this is a valid swing low and we are breaking here under, that means we are still bullish because once price is closing here above, we are taking now the new range and we are taking here again the new range. And here are only two different mechanical ways how to determine ranges. The first one, which is the one which you are using at day trading and not at position trading, that once price is closing above the range, you are taking the high and the most recent low which created this high. This becomes our protected low. But if you are a position trader to look for the long term of trend, then you're taking this high and you're taking the lowest low which is in the current range. This is a little bit lower than this one. That means this becomes now our new range. These are the only two things how the mechanical way to understand whether we are bullish or bearish. Ask 10 traders about this price action here, whether we are bullish or bearish, and you will get different opinions. But there is no different opinion about this. There are only two mechanical ways, nothing else. And there are only one mechanical way to understand whether this is a swing high or swing low, or this is a swing high or swing low, based on the concepts which I have explained to you here. And what I was talking about in the beginning of the video, about that Algo Expert is giving you just, you can apply that for yourself. You don't need any tools because I have teach you how to understand what are the swing highs and what are the swing lows and how to identify them to know whether we are bullish or bearish. So you can do that for yourself. And the only thing which Algo Expert is doing in all our tools, in everything, like for example, let me just take here the order flow price action tool. It's just currently applying. You will have this whether we are bullish or bearish based on this understanding on all time frames. That means you have now an overview whether the M5, M15, and you can select all the time frames. Let me just take the basic market structure here on the charts. It's the same. This market structure tool is in all these tools here already applied. That means you have here, you see here, all this custom price, like for example, you can customize the time frames and you customize everything how it looks. Everything's already applied here also. Here you see that here market structure, and you can customize everything how it looks, and you see the protected low and protected high and so on and so forth. So this market structure tool is applied in all the other Algo Expert order flow tools and so on and so forth, because you can have it then clean on the charts and use also the other tools together. You can just need only one tool. Like for example, if you decide to use just the order flow PA tool, you can use order flow and have also the market structure. Why I'm now applying this on the charts, I just want to show you, if you do like for example the swing highs and swing lows, you will see now what I have shown you. This is the swing low, valid swing low. Why? Because this one and this one is higher, and this one is higher, and this one is higher. That means 2 candles after, 2 candles before are higher. That means this is a valid swing low. All the other bit in between, there's no swing high. Also this one, there is no swing high. Here we have 2 swing highs, and so on and so forth. And this is the way how you just decide whether we have a swing high or swing low. Everything in between will be not valid to determine this as a valid swing high and swing low. And because we have everything here in between, you see that here we have everything here in between. you will now have to decide whether we are bullish or bearish based on the understanding of what I have explained to you with the way, if like for example these are all the swing highs and swing low you are looking for, we are determine where is the range to decide whether we are bullish or bearish. Nothing else. And this tool is doing already for all the time frames based on what I have explained to you with the real swing highs and swing lows to understand whether we are bullish or bearish on every single time frame, that you just apply it on the charts. Like for example, go quickly on Euro USD and you will see quickly whether which time frame is bullish or bearish. And also you can do that with all the other time frames, that you apply them all on the charts. Let me do also the M5 and so on and so forth. And also you can have clean charts that you just not pressing here the swing high and swing low. You don't need to see them because the tool is already doing the work for you. And you can just look, for example, the protected highs and protected lows. You see here, this is the protected low and this is the high. That means we are inside currently of this range. Here, price has not closed here inside. That means on the M15, in between we are bullish. You see that here, M15 is bullish. And this is how the way price is working. Let me just go back in time to, like, for example, see here. You see here, we have here the protected high, which create this low. That means we are bearish. That means price needs to close here above. This is the range. Price here, for example, we don't have any wick here, but the range is this one. And you see here, once price has closed here above, let me go back. Little bit, it was too fast. Once price is closing here above candle close, you see here that the protected high and protected low is now, we was bearish, now we are bullish. And now once the candle is giving us a valid swing high above, you see here, one is this now the valid swing high, two candles after are lower, these two candles after are lower, now we have a new range. And now we are bullish here. And I can apply again the way that you can see also these swing highs and swing lows. Now you see here, this was a valid swing high. Once we break above and determine a valid swing high, now this becomes our new range. And this is how the market structure understanding is working. And the good thing about this tool is that you can see in all the time frames whether we are bullish or bearish directly. You see here we have now a new range. This is the high, this is the protected low, and now so on and so far. Now this is the range. Now once price is closing under, you see here, let me go back in time. Inside here we are bullish. And now once price, you see here, we're still bullish. Price has failed to close under this one. Once we are closing under, you see here, we are bearish. This is now the protected high, which creates this low. And inside this range here, we are bearish. And no matter price is doing here inside, whether we are going here above or whatever, we are still staying bearish. Once price is creating a new swing high with a break of structure again, now we have a new range. This is a smaller range, but you see here the difference. Before that, before price has closed here under, to be bullish, price has to close here above. But now the protected high is here because the protected high is the high which has created the low. That means here is the liquidity resting, where the buyers are now are on the stronger side once they are closing here above, and we have then bullish pressure here above. Everything under, we have still bearish pressure. This is how I have explained you in the beginning of the video to tell you, just to go here back, just one moment. Let me go on the 4, I think it was there. Yes. It is about understanding liquidity, whether price is getting stronger with the bullish pressure, which I have shown you on the Euro USD, or weaker on the sell side. And you have 3 ways to understand whether we are going to buy or sell. One of them is the way of understanding is the market structure. The second one is price action. And the third one is order flow. Nothing else is working in trading. And I'm going to tell you that you see, like, for example, if I'm going to the order flow thing, just to give you an example, because some people are asking, this is not true. Like, for example, there's a fair value gap or whatever. Let me go back in time, like, for example, here. Because we took the shorts here. I think, yes, this was no, that was not true. This is not true. This is not the way where we took the shorts. Just a moment. I'm back in time. Still on here we took the shorts, because I was way back in time, because the shorts were yesterday. Just a moment, you see here. I'ma just tell you 2 things, like, for example, on fair value gap. What is low volume node in trading? Low volume node in trading is a place where price move it a lot faster than on the other, more faster. Like, for example, let me just, how I can explain you that in the most easiest way. Once price is moving fast, it's offering a fair value. This is a fair value gap. Like, for example, if you have 2 candles, this is the first candle, and now price is moving very fast. Like, for example, here up. Then you have between this candle and this candle a fair value. Like, for example, from here to here. This is called fair value gap. What people are teaching you in ICT or whatever. And sometimes they are using this and sometimes it's working. Then they're using it another day and it's not working. And they are telling you, okay, the strategy is not working. And why is a fair value gap sometimes working? Because a fair value gap, let me explain you this. A low volume node, every low volume node is a fair value gap, but not every fair value gap is a low volume node. That means, you see here, if price is moving fast, that means there are in this place here where buyers or sellers, when in the vice versa, if we have bearish fair value gap, where price or buyers did not have a chance for a fair value. Let me just explain it in the most easiest way, to not that everyone is understand this in the kindergarten explanation, where price is going to return to this because there is no volume at all here. And this is the low volume node. You see here, price is returning back and going up. Here is also a low volume node. Price is going here. This is like a bearish fair value gap. It's going down. The same thing here, the same zone. It's going up. It's going up. You see here, price is rejecting. Here's another low volume node. Price is going up. Now, if an ICT trader is going on higher time frame here and marking, like, for example, here a fair value gap, it's working at this time because, as I've explained you, every low volume node is a fair value gap, but not every fair value gap is a low volume node. This is the thing which is the difference between, if you understand the real things which are working in trading, then you will know, okay, why ICT is sometimes working, but because it's a concept from order flow. Why is, like, for example, another strategy working? Because it's a concept of price action. And also the market structure. So only these three things are working to understand the liquidity, whether we have strength in price or weakness in price, whether we are going to buy or whether we are going to sell. Nothing else. Another example, which is, so for example, from the order flow in the auction market theory, like for example CRT, candle range theory. In every session, like for example here yesterday, let me just go here, back in time. In every session which is going to open, like for example, this is the COMEX opening of COMEX, which is related to order flow. If I go on GC, okay, just doing this filter. There, GC. This is from COMEX. Here are the institutions trading. And which time is the institution is going to open? It's always going to open at 8:20 EST time. That means, and this time here, because in CRT they're teaching you, like for example, that time is more important than price. You see here, if you are forming here, this is the first hourly candle, this is the initial balance, which is called in the auction market theory. That means in between here, let me just press, and in between here, this is the hourly candle of the first hour. That means now CRT traders is coming and they are trading just simple the 1 hour candle to, like for example, I'm now here doing CRT model 1 or whatever, I'm shorting here, and it's just initial balance. It's just initial balance. So they're using concepts which are called fair value gap, CRT or whatever, but without understanding what is the truth behind that. Why is this concept working? Because they're looking at CRT. Sometimes it's working, sometimes it's not working. The same thing for the fair value gap. Sometimes it's working, sometimes it's not working. But the thing is, if you understand why everything is how it is, because you are not understanding, you are not learning a strategy. You are learning the concepts. You are learning how real trading is. Initial balance is the first hour of the kill zone of the opening of every, like for example in gold it is COMEX, and if you go to NAS 100 you have to use, here you see I'm doing this session, just a moment. This is here, COMEX trading hour, the first hour of the COMEX trading floor. This is for gold. If you're trading NAS 100 or US 30 SPX, you're going to use the initial balance of here, the US CAS session. This is going to be a little bit after that. Now it's showing you, this is the first hour of the US CAS session. So this is the point which I want to explain you, is that once you understand what is really important in trading, you will understand the concepts, and whatever guru is going to try to teach you in the future, you will know whether it has something to do with the truth or not. And so this is the first video. I think it's already long enough. And please try to watch it over and over again, how to read market structure, because you don't need anything else if you understand market structure. Here you see that for yourself on the order flow PA, where you have everything with large deviation, overnight highs and lows, or whatever initial balance. You have also the market structure overview, whether we are bullish or bearish in every single time frame. The same market structure which you have also here. Nothing else. And last but not least, it is really important that you are learning how market structure and all the concepts are really working, because some people are maybe profitable or making money because they are using, how I told you, the fair value gap strategy or CRT or whatever. You can use it for yourself, but at least understand why it is working, from where it is coming, and also understand market structure. This is also really important, because once you understand the real market structure, whether it is bullish or bearish, you can use other concepts to be profitable. That means if we have here some people who are watching, who they are trading, like for example, support and resistance, supply and demand, or whatever concept, there are thousands of concepts in the internet. At least do your homeworks and make the fundamental things or the foundation true. That means maybe your strategy, where you are looking, like for example, for a fair value gap or whatever, which I have now explained you, can work, but the thing is, your understanding of market structure is wrong. That means you are looking for whatever sells, like for example, you want to sell because you see and for yourself, it's bearish, but is actually bullish, and price is buying, and you're asking yourself why I'm losing money. But the thing is, your understanding of how market structure behaving is not true. And about market structure, there is no different opinions. I must say that one more time. I'm not a financial advisor. Trading involves risk, because I'm not selling you anything here. After this concept which you are learning, there's nothing to apply from Algo Expert, which there is no courses or no mentorships or whatever you're going to learn from me. Everything which I'm going to teach you is here on YouTube for free. And I must tell you that one more time. Market structure, if you understand market structure the wrong way, you are going to buy, but price is going to sell. And the thing is, I must say this one more time again, is there's no subjective way to understand market structure. There is only one mechanical way. There's no opinion, because some people are speaking about, maybe is there a candle close, the body close is the one which is determined for bullish or bearish. Like for example, if this is the range, and now a body close above. No, this is not a mechanical way. This is a way how you are trying to teach market structure, and this is not true. And also the way how I am teaching you market structure is nothing which I have learned from myself and I'm going to teach you whatever. This is the mechanical way how trading is working. I'm not teaching you based on subjective ways, or this is my opinion. This is the real trading, how the institutions are reading market structure. There's only one mechanical way, and this is nothing about opinion. That means if you understand market structure right, and you are asking 10 traders who understand market structure right, everyone is going to explain you the same way, whether we are bullish or bearish. So this is the first day where I am explaining you in different ways about everything. And in the next videos, I'm going more in depth about the topics here, and I'm going more in depth about all the concepts, about ILC concept, because ILC concept is the understanding of price. As I explained you also in the first minutes of the YouTube video, if you just put price action trading on YouTube, you will watch 10 YouTube videos from different guys or people or whatever, and everyone is going to explain you price action in a different way. But price action, there is no different way. There's only one concept which is working. Everything else can work by sudden, like the example of the fair value gap, which I've given you, of not every fair value gap is a low volume node, but every low volume node is a fair value gap, which is related to order flow. And I see some people who are teaching market structure the right way, and everything else is not really good, what they are applying, but they are still doing money and they are making profits, but only because the understanding of market structure is right. That means once the market structure understanding is right, you have at least 1 point of these 3 which is right, and you can do money. So, but once you, like for example, do market structure and you apply price action in the right way or order flow concepts, then your winning rate on your is getting much higher and higher. Like for example, if I'm going here about the gold trade, let me just explain you very fast if I'm going back in time. These are the shorts from today. Not for today, from yesterday, sorry. Let me just apply this order flow tool. Yes, we have a large deviation. That means the range from the opening until the value area low divided by the range of the value area low until the value area high. This is a mathematical thing of the auction theory. In 2000 trades, when we have a large deviation from the last, I think it was 15 years, there was between 75 and 85% chance where price is not going back to the value area and it's going to continue the previous trend. So this is a statistical thing from the auction market. That means we have now a large deviation. The calculation, the mathematical calculation, which I have given you now, the order flow tool is already doing it for you. That means it's giving you directly at market open whether we have a medium deviation, large deviation, small deviation, whatever. You see that here. Let me go. I think that this was the candle at the market open. Yes, this was the candle. That means you see here, once market is opening, it's calculating directly whether we have a large deviation or a small deviation, medium deviation, based on this mathematical thing. And the volume profile has to be from the previous day session profile, not any time which you are selecting. You are selecting the kill zone session of the trading hours of the commodity or the pair which you are going to trade. And this one you can select also, and here, like for example here, the comics trading floor. You can do the US cash session, New York, whatever. You can see the weekly profile, the daily profile, composite profile, whatever, everything. You can apply whatever you want. That means we have now a statistical thing of that between 75 and 85%. I have to get it back from the paper. That price, once price has a large deviation, that is going to continue the trend and not coming back above to the value area. That means price is already, buyers or sellers are already going to push price further. This is a statistical thing. This is nothing which I am telling you from my mind or whatever. This is a statistical thing which you can search from the auction market, that they have proven that over 2000 trades over the last years, that this is a statistical thing, that price is going further and continue the trend by a large deviation. That means we have a large deviation. We have the initial balance from which which I've explained to you about the CRT, that the initial balance, that price is rejecting the over initial balance and also rejecting also the very area low. And now we are closing under the overnight low, and now we can sell. That means there are a lot of confluences. And also there are in every session the anchored VWAP. You see here the anchored VWAP. You can also select the VWAP. Let me search for the VWAP. Here, the anchored VWAP. You can use the VWAP, the daily VWAP, the New York VWAP, the US cash session VWAP. Because we are trading gold, I'm using the VWAP based on market opening from the COMEX trading floor of gold. That means we are under the VWAP. We are rejecting value area low. We have a large deviation. We having here as intraday trading is bearish. Many confluences. We are under the scalper line where we are red. That means here, you see that here, this is the scalper. Here below, just let me see. I think it is just a moment. Yes, you see here, the scalper, where you see it is red. That means it is reading strength, weakness in price. So we have many confluences which we are applying together, and then we can short. So nothing else. I think it's already long enough, the video, so we are 40 minutes. In the next videos, I will go more in depth about naked profile, previous day highs and lows, or whatever. And I'm going also in depth about the Algo Expert Pro Scalper, the buy and sell signals, market structure. I will go in everything more in depth, and also more in depth about how to read price action and so on and so forth. So I wish if anyone has any questions after this video, please write it down in the comments. I will go also about them more in depth in the next videos. And don't forget to subscribe and also to test for free all the tools which we are having here at Algo Expert with our 40 days free trial. And once you are joining here, you will be also on the private premium Discord channel from us, and you can ask whatever you want, and I'm going to explain you everything further. So hope to see you soon, and bye bye.